good morning, good afternoon, or good evening, depending on where you are in the world. And thank you for joining us for this Arum Approved Systems webinar with CGI. Our agenda today is largely based around the conversation that Michael and I are about to have around customer journeys, decisioning, and AI. Please do feel free to ask any questions or even just share thoughts through the Q&A section. We'll try to answer any questions at the end, but please don't wait to ask them, pop them in as they occur to you. So I'm joined today by Michael Orefice from CGI. Before I pass over to Michael to introduce himself, quick intro from me and a summary of Arum and the Arum Approved System Program. So Arum is a professional services and advisory firm with deep expertise in collections and recoveries. We're celebrating our 25th year and we operate in more than 20 territories across the globe. Our clients include central and local government, the debt advice sector, utilities companies, a broad range of firms across the private sector, including technology vendors, high street banks, car financing, and so on. We provide a blend of practitioner-led consulting and end-to-end change and program delivery services. The Arum Approved System Program is a way for you to assess your system against more than 20 core capabilities. And from that, we deliver a detailed report, including scores, recommendations for improvement, and future growth. If your system meets the criteria, then the Arum Approved certificate and logo allow you to demonstrate your system's capability in a competitive marketplace, benchmarking yourself against your peers. And of course, you gain exposure through Arum's marketing collateral and the opportunity to co-host webinars such as this one. So I'm Steve Coppard. I've worked in the debt resolution industry for nearly 23 years, done pretty much everything from operations to analytics, project and program management, commercial oversight. And I did a lot of that in HMRC, in our tax authority over here. And then I moved into the UK Cabinet Office, where I was responsible for prompting policy and strategy improvements for the entirety of debt owed to central government by businesses and individuals. And then around 18 months ago, I joined Arum and its sister company, Just, as the Group Director of Debts Policy and Strategy. Like I said, I am co-hosting today, so I better shut up there and pass over to Michael to introduce himself and CGI. Michael, over to you.
Thank you, Stephen. Mike Orefice. I've been in banking for about 29 years, have been in, a similar type of pattern as Stephen, where I've done operations, I've led organizations, I've run technology organizations, I've been the liaison between business and technology. I've helped organizations and business leaders and CIOs develop ecosystem strategies for technology around the collections and origination space. So, have had an opportunity to work with some really wonderful people and learn a lot from, really smart and intelligent experts across the globe. So I've been super fortunate in the role that I have. I joined CGI about a year ago in January of 2023 after doing some consulting work in banking for a couple of years, and am responsible for a lot of our credit products, or the IP that we use to satisfy the needs of people that are associated with the credit life cycle. And CGI has a much larger presence in the consulting world than they do in kind of the IP space. But we're going to talk just about, IP products today and that type of thing. But, a brief history of CGI, an organization that began in the 1970s, has 94,000 employees, a little over $14 billion in annual revenue, and relationships in government, in all industries, or most industries, I suppose, and really just a wide variety of people and experts, in so many different ways. It's really interesting. I find new stuff every day about the people I work with. So that's that. Stephen, thanks for giving me the mic.
No worries. Thanks very much, Michael. So if we could bring up the main content slide, and we'll just touch very briefly on sort of 3 topics, and then I'll ask you to come back in on that, Michael. So we're going to look today at, first of all, how you decompose the customer journey, and thinking about documenting those decision points, and then move on to change, analyze, and progress. So talk a little bit there around machine learning. And then finally, how we take a pragmatic approach to the technology And we'll then bring in the artificial intelligence piece. I guess looking at that first one, Michael, decomposing the journey and thinking about documenting the decision points from start to end, if that's even done at all. I guess one of the things that occurs to me is how do you do that adequately? For me, I think there's a need to focus on closed questions with maybe the occasional and or gate. But for the most part, if you open up customer journey design to infinite possibilities, you're going to get out of control very, very quickly. So therefore, for me, I guess the art is how do you design it so you're able to process the optimum volume of journeys digitally, and then only using the less cost-effective channels where it's optimal to the business outcome to do so.
Yeah, listen, it's a great question because the first part that you have to realize is that with great kind of configurability comes great responsibility. And when you're dealing or when you're interacting with customers and clients and everybody, they always ask, well, can you do this and can you do this? And we're constantly unpacking the fact that yeah, we can do anything. The question isn't whether it can be done, it's a question whether it's appropriate for you to incorporate it right now, and how do you make those decision points. And that's where we get into the kind of the unpacking of a business flow, or of a journey that can have countless different paths or patterns. So what we like to work with is almost to start in the discussion an anti-AI easy button approach to the discussion, which is, hey, listen, let's talk about the big things that are important. What are your cost variables and what are your outcomes that you're driving for, right? And where are the big milestone decision points right now? And what sort of intelligence or decision patterns are you using at those points? And then let's talk about those. But when you start up front with saying, hey, how much are you willing to invest in the journey to start? So you're kind of managing that cost as a variable that rides along the decision points with you. Then when you get into the cost of a journey, you say, hey, is that an edge case? And do you really want to spend that much money to solve it? Because it only happens 3 times or 10 times. So, it's really it's a fascinating conversation. I love and we truly greatly enjoy having it when we sit down with our clients and everything else. But we try to always service them back up to what we call the kind of the milestone decision points, which are the big rocks in the journey right now, and how well those being done before you moved into those more discrete ones that we can shine a light on and illuminate, at any time.
Who knew that we'd be paraphrasing Spider-Man in a technology webinar?
Exactly.
So I guess then, thinking about like each of those decision points, then each one of those is going to need data points. And how do we go about evaluating or influencing the decision outcome? And I think just thinking like from my perspective, and I'll ask you to come in on this in a sec, Michael, is I guess there's an opportunity here to bring in sort of behavioral science, so nudge and sludge. So you could introduce, for example, friction into the customer journey if the decision isn't in the customer's best interest, or provided a behavioral nudge if it is. And just to give an example, that sludge could be you create friction by requiring somebody to put additional details into a chatbot, or the nudge could be a message saying this is the best choice for 93% of people, or whatever the number happens to be. So what's your thoughts around that?
Well, that's kind of a constant debate, if you will, that we have. On the one hand, because of the ability now to do inline synchronous interactions with everybody, right? The general concern for the business for decades has been, well, I can't stop and ask them, because if that slows down the transaction, I'm not going to get the outcome I'm looking for. And so I just need to press them right now to give me what I want, right? Kind of the old school collections methodology, like, yeah, it's terrible that you lost your job, but can you pay me? Right. And now everybody's way more thoughtful in the approach. But, the one thing that we can do is where you talk about slowing down that transaction and applying friction. Yes, we are in one hand saying, hey, let's pump the brakes a little bit, because I can give you better insight if you're willing to give me information. But by the same token, I can now make the interaction so much easier to do, right? I can integrate with tools where I can automatically grab information that's very detailed. I can ask you to enter it and I can kind of digitize it and synthesize it and then bump it up against tools to make sure it's directionally correct. And I can do that in, milliseconds so that there's no interruption to our discussion while it's happening. And at the same time, now I'm pulling back the responses that allow me to react to that information so that I'm delivering, value back to you immediately. And that was very, very difficult before. When we talk about the word omnichannel, which is, has been used to describe nearly everything, right? That is truly, I think, what everybody had in their mind when they talked about omnichannel, is the ability to bidirectionally interact across multiple channels with someone in a single interaction, or a interaction interval, if you will, that could have spanned 3 days and 7 channels, but was always part of the same narrative, right? And those are the things now that make it easier. So when you talk about nudge, I can nudge you in different ways, but I can also slow you down to get better information so that when I am getting back to you, it's spot on. And that's, I think, the key.
Yeah, that's a really good point. And I think there's something in there thinking about sort of across all of those data points, the level of influence, and the relationship with the journey outcome, or that milestone decision point. Do we actually know that info? And I guess linking that to what you've just said, that for me feels like where that feedback loop is all important. And we might get on to discuss that in a minute, but it that isn't always as easy as it should be. So especially where you've got one of those really complex journeys, or there are failure points buried deep in the process.
Mm-hmm.
And I just want to add a little bit of color to that. So something that we did some work on what we call micro journeys. And we found buried really deep into the end-to-end customer journey, there was this really high drop-off rate of people sort of leaving the process at the direct debit sign-up point. And when we isolated it and analysed it, we found that the exact part of the process was a step that required a reference number that wasn't on any recent documentation that the customer had been said. And when we asked the client what the reference was used for, it turned out it was a legacy thing and it was no longer used at all. But if you're thinking sort of in machine learning terms, it would be really difficult for machine learning to, in fact, I think probably impossible for it to pick that up and rectify it. So where again, I'll come back to you with some of those decision points. Do they carry a greater level of influence, do you think, or a bigger impact on the outcome?
So I think there are some that are, that do have a profound impact on the outcome. I think when you take things that are fact-based pieces of information that you don't have earlier in the journey. Take, for example, income and expense, which I know from an IE perspective is, a critical path to, consumer duty now. When you have that information now, you can compare it to millions of other previous transactions and understand, what is possible and how can you help and how can you provide responses back that I think are really, targeted and specific. But there are other areas where it doesn't help at all. You can say I'll plug an algorithm in, but to what end? You're at a divergent point where they've said they can't pay, right? So no amount of AI data science magic is going to change their answer to yes, I can pay. You have to now look at working with the consumer in different ways to do that. And one of the things that's really interesting, and we're kind of exploring a lot of this now at a industry level, is, do we assume too many times that the consumer knows what the journey through debt collection and the ramifications of being behind on your debts really means? Like, do they understand the cost of funds and what it does to them in the next 3 to 5 years? Do they understand the industry enough that they can make informed decisions? And are we doing enough to provide training materials or educational materials they do? And then if we can provide those things and we can monitor their, kind of accessibility to those things and when they're using them, should we be providing, almost an encouragement to them to do that? And would those be considered in kind of a anti-pattern to just trying to plug in machine learning or things like that, right? Is that a much more appropriate and responsible approach to interaction? I think one of the conversations we had, which was, are we even talking the right language to the people? Not the actual language like English, Spanish, or French, but, when we're referring to what we need to a person who's in their early 20s is it the same language patterns we should be using when we're talking to someone who's in their late 50s? Because those are completely different, narratives in some cases. And I'm not sure that, the message that we're sending is being interpreted the same way it would be for both of those audiences. So there's a lot of different things now that we are exploring that are not tied directly to intelligence, but certainly speak to, the level of understanding and commonality we would now have in an interaction or in a journey with a consumer.
Yeah, and look, the pain is real, right? If we know over here that if you ask the average person in the street what debt is, they will give you a completely different definition to the one that all of us working in the debt industry would. And so it even comes down to simple questions like, what is debt?
Mm-hmm.
And once we start expanding that language out, it snowballs. And I have got this. I keep talking to people about it, and one day someone will do it, Michael. But thinking about the potential for Gen AI to actually tailor your comms on the fly to different reading ages, even. And when we look at consumer duty in the UK, firms need to satisfy themselves that their communications are going to be understood. So I think there's huge potential. But let's move on then to the sort of the change, analyze, and progress bit. So I think we probably agree, Michael, that machine learning is essential to identifying the relationships between the information and the outcome. But I'm really not an expert when it gets into the detail here. So do you want to give me a view from your side on some of that?
Yeah, absolutely. So, if we talk about the generative AI, kind of example you just laid out, there's a couple of things that really drive, the use of things like that, right? And it's really twofold. The machine learning limitations are that it has to have lots of information in order for it to understand and identify the signals or the patterns within the data that really, are key to training the algorithms appropriately. So, number one, you have to say, hey, here's 10,000 outcomes, and of the 10,000, 2,000 of are the ones I want and 8,000 are the ones I don't. And here's the 38 data, elements within each of these journeys that I can surface to you. And, computers, go do your work, right? But behind the computer is a person who is looking at those things and constantly trying to optimize and manage the polarity of each of the signals that they've identified to give you the strongest propensity returns. At a very kind of simple level, that's part of how this, numeric based analysis happens. So the number one challenge everybody faces is, data scope. Like, what data do I get? How much time do I have to spend massaging the data so that I can count it as like pristine enough that I want to train my models with, et cetera? So solving the data problem is first and foremost one of the biggest things. Then the next component of that analysis is making sure that you have a clear view of the outcomes that you want, but also the outcomes that are next to the ones that you want. So if you're looking for a promise to pay or a broken promise, you need 10,000 records, some of which were broken promises, some of which are not. And if you're trying to avoid broken promises, and that's what the algorithm is designed to do, you need to be able to show the positive and negative elements within that. And you have to be able to constantly repeat that process and constantly optimize, because things change over time. So, when we talk about the change, analyze, and progress, what we talk about is a decision point and the ability to release the data that we have built up or amassed to that point in the decision journey and send it off basically to, kind of a learning component. That's, RAI. There's other models out there, customer models. It doesn't matter, right? We surface that data, we allow it to be processed, and then we want to bring it back into an A/B testing condition right away. Right. And then we want to A/B test it. And then we want to go ahead and say, did it improve or did it not? And then allow the client to basically say, it did improve, I'm going to keep it. It didn't, throw it out. So we embrace kind of this concept of fail faster, in doing it. But while that's an important anecdote, the key is that we are very much focused on compressing the analysis cycle by giving you in-phase data that's consistent, understanding the decision point outcome that you're looking for, not the journey outcome per se, the decision point outcome. So you're bound very clearly, and that helps you understand what you're analyzing. And then the ability to get the return incorporated into a kind of a test and learn and, move on very quickly.
So let me unpick that. Is what you're doing there, is it effectively, I don't know how to say this, Michael. Could I call it next best action code decisioning 2.0? Is it the abolition of a fixed strategy based on feedback at each and every decision point, learning in real time from every other action? Is that kind of where we get into with that?
Well, that's exactly what it's designed around. Kind of the functional design was like, hey, how do we synthesize this appropriately? And that was, the genesis of that need came from the fact that I've sat in rooms with a team of unbelievably, skilled and exceptional data scientists, some unbelievable business experts. And then I've watched them try to talk to each other about like what it is they're trying to accomplish. And it's, the business is looking for business language. The data scientists are trying to talk about outcomes. In the middle is this understanding of data. And, well, what happens if this, and what does this one mean? And what does this one mean? And, what happens is almost like a comedy skit as they're trying to figure out the common language between the two. So when we focused on this, what we wanted to do is we wanted to make it simpler for both parties. When you snap a line at the decision point, that's the business telling you right here, I'm looking to optimize or to, maximize this return. And here's all the data that I have. Now a data scientist doesn't have to go do a lot of, kind of extrapolation and understanding. They already have a fixed endpoint. They have a kind of an in-scope data set. It hastens that process and limits the amount of, toing and froing, if you will, between the two expert groups. So next best action at any decision point is exactly the model, we're kind of looking for.
So that I'm always looking for a silver bullet, Michael. Isn't that the sort of the holy grail? So I'm going to ask the simple question again. Is machine learning combined with Gen AI, is it the magic easy button that eliminates the need for thoughtful, pragmatic approaches to hard work?
No, absolutely not.
That's a shame.
It is a shame. The number one question I get, very early in every discussion with somebody is like, well, what does your AI do? Or is your whole system powered by AI? And the answer to that is absolutely not. And, frankly, if anybody tells you that, the next set of questions could be, great, explain it to me because I want to understand where your data came from. I want to understand how it's powered by AI. And, typically that's where things start to fall short. We have the ability, and CGI has a team that is an exceptional group of AI data science professionals that can do anything, but they do need to be focused into very specific points of value so that they can give you, intelligent returns that you can practically use. Right. But when you're listening to any other salespeople or anybody who's talking about their product, they're kind of explaining it as this magic bullet, this magical science that you don't have to know anything. It just makes it all better. And we're talking about the opposite in this discussion. What we're talking about is a very controlled and methodical approach, saying from the biggest decision points to the smallest decision points, wherever that line is that you don't want to cross because it's no longer a worthwhile investment, right, for you to get into this meta decision space, right? That's where you need to kind of holistically look at, one decision at a time, one set of analytic inputs at a time, and progress from start to finish to make your journeys as robust as they should be to suit your business outcome needs, but at a manageable cost. And, understanding at every decision point where that, space is so that you're not investing in things that add no value. When we work with clients, we often hear that they've invested millions of dollars in data science, but they haven't been able to necessarily get traction in real practical use cases that they can point to in their business that says, when we did this, we got this, and it was an improvement. There are some, I'm not in any means saying that everybody's, just throwing money out the door, but it's very difficult to try to do it at a holistic level and get the level of value you're looking for.
Right. Look, you know me, Michael. So I was maybe a little bit cheekily playing devil's advocate with that question. I think it was worth just delving into. So, would it be fair to say that another outcome of all this is that it really has the power to transform the know your customer data set held by organisations, and by that I kind of mean revealing facts from the data rather than assumptions and hypotheses. There'll obviously be some need for testing, but does it give firms the confidence that they're truly driving better outcomes for customers first time, every time?
So I think it can, and I think it does in many cases. I think in spaces where we've seen, great use of machine learning and concepts around AI is certainly in fraud and KYC, where you can look at individual data points, you can run them up against risk solutions, and come back with almost a traditional scorecard view that is then synthesized into, a number that you can react to and say, okay, I'm confident this is, or I'm confident it isn't fraud, or that is the right person. So I think those areas are great. Where we're seeing a little bit more interaction to really make sure there's a high level of confidence in the returns is actually in a different space. So, in the application journey, for example, or in the credit journey, I make a decision about, that loan and the ability to repay that loan at the time that I process it. So you tell me you're making, 150,000 pounds a year and you're asking for $10,000. And I say, great, there's plenty of room, plenty of open to buy for you. Have at it, right? Go nuts. 24 months later, I still haven't done anything to verify that you're at 150,000 pounds a year. It's gone up, it's gone down, or anything else, right? So it's actually kind of a blind spot. But as I'm looking at the other patterns, like your spending habits or the things that are associated with your everyday, interactions across this credit vehicle, I have data science processing in the back, like, hey, look, a number of transactions went up, went down, whatever it is, they were paying, their balance in full. Now they're making minimum payments, or these risk categories. And when we're getting these these responses, we can now start to say, hey, they've steadily dropped from high to low. Can I use my frictionless interfaces to go ahead and reach back out, not as part of a collections activity, but as a part of a, check-in activity that says, hey, how are things going, right? Can start showing some information, give them 3 links, one that says what to do when you want to go on vacation, what to do when you're trying to save money, right? Or when you're trying to manage your budget more closely, and see which link they click and use that as an input back. So I start getting these additional signals that I can use from a data science perspective to really now understand more about the customer or the consumer. So there's a lot of really interesting things that, we're opening the door of possibility in that were previously out of reach because it was just going to take too long. It was too hard to have technology that could accommodate those sort of micro journeys or micro interactions.
That's really interesting, and look, that echoes really strongly with some of the stuff that we're hearing at the moment. A lot of people, because we know the macro environment is driving people who haven't been in debt before to get into debt. There's a bit of a clamor at the moment for exactly that sort of predictive telltale signs that somebody is in the pre-delinquency space and are likely to step over the barrier very soon. So being able to, I love that example of sending out the 3 links around holiday and how to save money, and then seeing what comes back. I think that's a really, really clever idea. Michael, I think we covered all 3 of our boxes. Was there anything that I've not asked you about that we should have touched on?
Well, I think that there's just a couple of things in box number 3 that, is just a kind of a good public service announcement for everybody. And it stems back to what you mentioned earlier, kind of cheeky with the, is this really the silver bullet or the easy button? For those of us who are a little bit longer in the tooth, we've gone through several kind of technology revolutions, if you will. And it wasn't that long ago we were talking about enterprise data warehouses and how if you have all your data, you'll be the smartest organization out there, and data is your new currency and all that. We went into the Internet of Things, which exposes data everywhere. Now we're kind of in this unstructured data everywhere revolution. And on top of that is machine learning as a way of coping with all 3 of those kind of investments that they've made. But in reality, there typically is, an 8 to 10 year lag from the time it really catches on and everybody starts investing in it till the time that they determine how are they practically using it to add value in their lives. And things like generative AI can be very easy. Summarizing all the notes you have on a consumer who's been in collections for a little while, over the course of many months and many kind of ins and outs of collections is a great use case and makes total sense. And we wholeheartedly say, yes, like that's a great place to get started and, go nuts. But then there's others, these micro journey and these points of intelligence in a journey that leads you to a complex outcome. These are areas where, there isn't typically an easy button. A vendor who's promising you something is absolutely worth listening to, but make sure you fully understand when they say something as, ethereal as, well, it's AI or it's machine learning, right? Don't let that be the answer. Understand where it's coming from, because in many cases, it's really nothing more than, a pretty wrapping paper on those things. But the key is that, you have to couple the ability to get new data, things that don't exist today that somebody invents tomorrow, and bring it into your decision loop in order for your machine learning investment to be as worthwhile today as it will be 3 years from now. If you don't do that, if you don't have the ability to constantly expand your data scope and involve or incorporate more things, then you're not going to get what you want. And anybody who is telling you that it's of huge value is kind of oversimplifying what it takes to maintain the value of your investment over time. So I think that's the key. And I was able to look at, the list of attendees, and I think that there's, some folks that are on the phone that are, kind of in the trenches with us, competing against us every day. And I know that there's some great products out there. And I think everybody that's on the phone, if you kind of call them frenemies or whatever they might be, everybody is directionally trying to figure out how to put this back together in the right way. But the key to all the folks who are evaluating software and technology today is, just because someone says artificial intelligence, it doesn't mean it's going to make it easier for you. You have to understand what they're talking about and what it means.
Yeah, you're so right with that, Michael. And I saw a case of it only just recently where somebody told me, I won't mention obviously the product or the name, but they told me that this product was AI. When you started scratching the surface and got just a little bit past the veneer, it was actually just fixed customer journeys that were directing down paths. And effectively, that's no better than with the old IVR system on the phone. Press 1 for this department and 2 for that department. It's still programmed underneath the service. There's no real AI happening there at all.
Yeah, and if they are selling outputs, where did they get their data from? Is that data, kind of similar to what your data would be? Because they've trained the model off of data. And if now you're using a completely different data set, then they're having to retrain the entire model. It's almost like starting new. And, there's a lot that goes into that. So it's just be very careful and don't get caught up in the language and the lingo that they use to, kind of obfuscate the fact that they're probably selling you something that may not exist today. So make sure you ask them to prove it, just in a responsible manner, as you would, you don't take the car dealer's word for it when they say it goes fast. Get it out on the highway and you check it out.
Fantastic. Love it. Thank you. All right. Was there anything else you wanted to add, Michael? I was just looking at the Q&A. We haven't had anything come in, so I think everybody's either mind blown or we've done a fantastic job of explaining things.
There's nothing on my side, and as always, I love to talk about this. It is one of my favorite topics to have a discussion about. I'm fascinated by the whole concept. But no, we've covered what we wanted to, and if there's any questions out there, then feel free, everybody, to throw them into the Q&A, and we'll happily answer them.
Right, so I'll just ramble for a few minutes. There we go. What one came in as soon as you start rambling, it happens. Do you have an example of an AI use case that is practical right now for banking?
Yeah, there's a couple that are hot. The one that you talked about, which is kind of pre-delinquency stuff. Especially organizations that have multiple consumer relationships, including especially if one of them is a direct deposit account. You can analyze the cross multiple credit relationships in that DDA account. Exactly what's happening, so that in advance, if you checked your entire inventory of multi-relationship consumer accounts right now, you'd probably find that 90% have a higher income than they do expense, and that they're siphoning off money that would be, kind of construed as savings or a net plus. And then you're going to have some that are living fairly close. Then you're going to have some that are dangerously close. And so those that are dangerously close, you're going to plug them into maybe a monthly pattern to continually reevaluate. And when you identify any sort of event that is going to be problematic, whether it's more expense or whether it's a loss of income, you can put them into kind of a consumer duty treatment program right away that goes ahead and takes early action. So that's a great one. As we talked about before, the kind of generative AI space to constantly recap is one. When you're talking about a representative that has a headphone on, being able to very quickly, assimilate the information that's happened over time is good. But we're also beginning to see interactions where that same summarization can be put into almost like a year-end statement or a year-end summary that you can now share with customers or consumers, and you can start giving them a flashback, because their perspective is that they're staring at the tree all the time. It's very difficult sometimes to kind of come back and look at the forest, but they're using that not only in kind of a collections function, but also in a relationship function, in a pursuit of, if you will, financial monogamy, where you want to have all of the customer consumer financial relationships with one bank. If you're that bank, one of the ways you can do that is to share that composite view, understand where they are in their life patterns, and begin to offer other features or lending products that can help them at the time and the place that they're in. So those are some that we're starting to see an uptick on, that I think really speak to how AI or machine learning can be applied to in the real world to provide benefit to both the organization and the consumer.
Brilliant. Financial monogamy. I love that phrase. I'm certainly going to steal that one. With another question come in, Michael. So how do you ensure transparency and fairness for customers in the use of AI in collections?
Well, that question is one of the most, kind of ruthlessly dangerous questions there is. So there's really two answers, and I don't know that there's a single school of thought out there. So I know that this one's going to be hotly debated and contested for years. But I think fair and consistent treatment is really a basis of your ability to prove that you've used the same fact-based analysis to go ahead and do the work. And so one of the conversations we have all the time is, when somebody does have an event, let's say a job loss, that, we kind of go from, hey, you're in great shape, you're current and all is good, to, hey, now you're delinquent and the whole game has changed. Right. And you lost half your income because you have, you had dual income and now you're single income. And we don't have the propensity right now to say, hey, I'm going to reduce your commitment to me in some level relative to the impact that you've had. But, you've lost your job, but then you immediately go pick one up. So you got 20% of your income back. Well, we don't readjust to bring 20% back into the picture. We basically go from 1 to 0 back to 1, as if that's normal in everybody's life. Fair treatment can be based off of your knowledge and fact-based understanding of their situation. So it's not about, did you offer this person or this consumer something different than you did the other one? It's about this person's situation is this, and every time it's this, I act the same way. This consumer situation was different, and therefore my response was different. So we have to change the way we kind of refer to consistent, right? It's got to be now based off of the additional information that we have that has been verified or validated by the consumer, for you to, be very comfortable with that approach and have discussions with regulators and other interested parties and be able to really demonstrate that you were consistent. You're just consistent at a level that we're not used to before, because we've never had access to this data or consistently been able to leverage this data. So scary proposition, but one that I think is an inevitable endpoint for us, as we have expectations that data sharing is going to be the norm, not an exception.
I couldn't agree more. Look, I tend to think about this, Michael, as treating people equally is treating everybody by the same rule set, but treating people equitably is treating everybody by the same principles.
Yeah, that's well said. I like that one. I'm stealing that one.
There you go. Both got something out of it. Right. We haven't had any more questions come in, so I'm going to talk very slowly for a couple of seconds as I look to find my wrap up. And if nothing else is coming in. Right, folks, all that's really left for me to say is thank you to Michael and CGI for investing the time to join us today. And thank you all for investing the time to listen to us as well. If you do have any follow-up questions, please reach out to either CGI directly or to us, and we'll make sure that we get you a response. With that out of the way, thank you again. And that's a wrap.
Thank you, everybody. Thank you, Steve.